Perfect. So I think the stage is set. So now I lost my notes. Very well done. Welcome everybody to this session today, Angels or Not, when is a business angel right for your startup, presented by Berner Kantonalbank and the Business Angel Club Are Ventures. Maybe before we start talking about business angels, let's take a little step back and discuss about the fundamental questions. What kind of company do you actually build, and is external capital effectively necessary to build up this company? There are many types of companies, business models, and founder ambitions, but not every company is necessarily made to go the VC track. So very briefly, what does it need or what does it take to become an attractive case for VC-style investors, whether that is business angels, family offices, or venture capital funds? In simple terms put, it needs to be highly scalable, needs to address a very large market, so multi-billions. It has to have a potential to reach significant revenue within only a few years, significant revenue 20, 30, 50 or 100 million Swiss francs or US dollars, and it needs to be led by a team that is actually willing to go that path to become a hyperscaler or a fast-scaling company, and that's also willing to work towards a major liquidity event, so-called an exit, where the capital flows back into the ecosystem. And why is that? Investors are usually not interested to be shareholders in a company or minority shareholders in a company for 20 years and just have small returns from dividends. If they are in a long position, generally they have different kind of valuations and equity stakes inside these companies, so it actually makes sense from a financial perspective as well. And that narrows the field of which companies are actually made to be backed by venture capital already quite a bit. So there's not a that high number from a perspective of how many companies are being incorporated that are actually made for investors. And many founders, they have the idea, I mean, in all the programs you go through, you're prepared to make an investor's pitch at the end. But it's not actually necessary that every company needs it or every founder wants that. Not everybody wants to scale globally or sell the company at some point. This is especially important in the Swiss context. If we focus a little bit on Switzerland, our country is made out of SMEs, if we want to call it like that, and most of them are not venture-backed. They've been financed by the founders or by traditional financing via banks, and you can say these companies have also reached global relevance, but maybe not at the speed of a VC-backed company, and not with the intent to be sold, but with the intent to build up a sustainable company for the next decades. And so many founders, they want exactly that. They want to keep the independence, so they don't want to have investors that push them to scale up faster, or that want to have veto rights in certain decisions. And so it's really the big question: do you actually want an external investor, and are you willing to go that path towards an exit and put everything that you have towards this direction or not? And I think this question is completely legitimate, and everybody has to ask themselves before going to pitch towards investors, because if you start preparing a pitch deck and documents for a financing round, that takes a lot of time that you could spend otherwise discussing with clients, doing market research, etc., etc. And so the question today is not only which angel is right for you, but also, do you need an angel at all? And so maybe a quick question into the audience. Who of you is actually currently building up a company and is looking for external capital and an investor?
Oh.
So it's a significant part, probably 65, 70% are actually on the track. Hey, we do want external capital, so that should be very exciting. So let me start with a quick introduction of the panelists. We have Raphael Oberholzer. He's founder and CEO of AVA. You'll say what you do in a short while. Maximilian Rothenberger, Max, he's CEO at Space Tech. Jörg Schwarzebach, he's founder and president of Aare Ventures, and probably everybody of you knows him also as a lion. He's in the Höhle der Löwen Schweiz since many series already. Eric Rufer, got it right. And he's a co-founder at Aare Ventures, and he's founder of Substring GmbH, an IT company. Myself, I'm Guy Giuffredi. I'm also co-founder of Aare Ventures, so I represent us here as well. I run a venture capital fund called Koyo Capital, and also run a podcast called Burn Rate, the Venture Insider podcast. If you're interested, feel free to listen in. It's available on Spotify. A little bit of ads doesn't do bad. So please introduce yourself quickly, what you guys do with AVA, where you stand, and before we start.
Cool, yeah, Raphael from AVA. We are a smart home operating system. We're a Swiss-American company. We're angel-backed. We have about 30 business angels being part of the company right now. And prior to that, I had another startup that was also angel-backed, and we successfully sold to American stock-listed company.
Maximilian.
Hey, my name is Max. I'm the CEO of Space Tech. At Space Tech, we do time-of-flight mass spectrometers. For those of you who are not familiar with gas analysis, it's basically a fancy gas sensor that you can either use to send to the space to explore materials, or you send it to Asia or the US for semiconductor manufacturing process insights.
So both Max and Raphael will represent the founders, and Jörg, the investors. Jörg, maybe you want to say a few words as well?
Oh, I think you said a lot about me. I'm the president of Marcaro. Marcaro is a family office, an investment company, but it's our money. We are not a venture capital company. And the company owns now my kids, Marco and Carol. That's also the name of the company, is Marcaro. So if you need an investment, please go direct to them. And at the end, I will help to make the right decision. We are located in Bern.
Perfect. Hey, thanks a lot. So let's start with Raphael and Max. What stage were you at when you decided to bring in business angels, and why didn't you go for venture capital investors, so VC funds, or bootstrapping?
I can go first. Very early on, just after founding the companies, we had a discussion, hey, would it make sense? And we knew about this angel club and say, yes, let's go do it. And it was during Corona times, so it was virtual. And we prepared for that pitch. We had a little bit of good momentum because of just having sold the company, so we had an additional good story to tell. And that led to a very successful pitch where we got a lot of requests from investors afterwards. And yeah, I mean, so it was basically led to an oversubscribed round, which was a beautiful thing. So for us, it was momentum, and as momentum indicates, it's momentary. So when the moment happens, I think it's important to be in a position to benefit from it. And it even led to a situation where we then had a little bit of like a wait list for a future round, which we then actually also really used and benefited from. So that was really after founding the company. For me, it was always clear that we want investors, because I think they're causing, and we probably speak more about that, cause a lot of good effects to the company as well.
Max?
So, yeah, I mean, essentially, basically, when we look back now, the way I present it now is basically there used to be a pre-seed stage where we had angels from Bern, entrepreneurs like ourselves, and basically that backed the company in the beginning. Then there was the seed round, which naturally was led by an institutional VC fund. In all fairness, it didn't happen like this. I mean, factually it did, but at the time, looking from the past to the future, we thought we built a completely different product. We thought we addressed a completely different market. I think when Jörg invested, or our ventures invested in us in the beginning, they were hearing a slightly different pitch. And as the reality goes, I mean, also Corona times, we pivoted in a way. I mean, the core technology DNA remains the same, but it's different markets and a kind of different product design. So for us, I think also to the question kind of why not VC and why not bootstrapping, I think it was the lack of understanding in terms of like which path to go with which pre-seed VC. And bootstrapping, I mean, we have a highly complex hardware component, so it's very costly. We need capital. So bootstrapping was only partially possible. So yeah, I mean, that's a little bit the true onboarding. I mean, standing here now, I mean, it's of course nice to talk about kind of what we were able to achieve through the time. But I think if you ask an early angel that invested in our company, he might be really confused in terms of like if you don't see the 3-4 years in between kind of what we did with the company eventually.
So to summarize, both of you have hardware, and you needed also capital to actually develop that hardware and then find the right use case. You already had that, obviously, with the experience from the previous ventures, but I think that's very important. So there was a capital requirement at the start. Jörg, which startups do you reject right out? And why? And why?
Yeah, there are. The first point is, what is the solution really? Which problem the company like to solve? Which problem of the is it a big problem? Is it a small problem? And is it in a way I understand? So we are I have a technical focus, I have an e-commerce focus, and you cannot invest in everything because you have to understand what's happened, what the people they do, and you will help. You have to help as a business angel. The business is one point and angel is the other point. So, and you have to understand the business. You have to know where the customers are. And for me, it's there are one point is the consulting resistant solo founder. That's nothing for me. So I prefer to have a team. That's important. The team can. You have different rules you have in a company, that's clear, and that can help if you have a problem, and you always have a problem. We had also problems with Ava. We had the idea, yeah, we found 2 million, and then it's okay, but now we are away from that. But we are successful, but it takes always more time and more money. That's important to know. And the company, the startup has to be in a good situation in the team. If the team has not the same focus, one will go there, one will go there, they have not the same vision, then it's not possible to invest. And we have to make the differentiation between a business angel and investor. As an investor, you can also invest in an electrical company, in a small and medium company, and normally they don't have an exit. If you are a business angel, you need an exit. That's part of the game, and you wait 5 years, 10 years, whatever, but you need an exit because you have only a small part of this company. If they pay the dividends, you have also a small dividend, and that's not interesting. But I can also be an investor, but then I need a more part of the share, 10%, 20%, then it's fine.
Thank you, Jörg. We are talking today the question of business angels or not in a controversial manner. And in the beginning, Raphael, you mentioned that you've already had in your first startup was backed by business angels. Now you already have with your second startup again business angels on board. So I was wondering what was your experience in collaborating and working together with the business angels? What were positive aspects? What were maybe a little bit negative aspects in during this path down the road until here?
I think one of the beauties with business angels is they're more friends with money than they're institutional investors that have to follow a lot of procedure, do a lot of due diligence and things that could be a bit more causing admin work. That slows us down, that sucks. So my general experience with business angels is they were pretty hands-off, Also in the sense of not asking a lot of questions, satisfied with some investor updates, but there to help when needed. So that was my main experience. Was they were, like friends with money early on, relatively little investment on our end to get them to invest, and then just nice to have them along on the journey. I think it's also the only investors that we would have gotten in the early phase. So for me, it's a super crucial part of the ecosystem. It's that when I always had cases where we needed money, and I think that's probably true for a majority of startups. And that's sort of the early money that you can get, and also the most helpful money, because it doesn't change all of how you need to operate, and doesn't change, gets you into drastic due diligence situations for things that you might not be ready with. But it still adds a little bit of professionalism required. So you need to do a certain amount of corporate governance, and that was always helpful for me, knowing that it's not just bootstrapped, not just my money. I have investors watching me, or also we have their money. We want to make them successful too. We want to make something back for the first. So for me, it's a additional responsibility that I feel when angels are on board, but not in a negative way. For me, it's exactly the right additional motivation and kick that I need. That's also why I'm certain we would have taken investors, some angel investors, even if we would not have needed.
Mm-hmm. So to summarize, it gives you more structure and less paperwork, right? So to summarize your thoughts, thank you. Maybe to add on to this topic, Max, were there ever a situation or a moment where you thought, we shouldn't have not taken this specific business angel, or maybe not at this point?
I mean, I'm very lucky in a way that we never had that. I mean, I hear stories from others. I think for us, our angels were always very nice to us. I think in a way, to what you describe, I mean, I would basically envision what you said, that basically the angel investors that invested in your company would also more actively maybe ask you some things, right, for the progress. I think for me, the confusion at some point was always that we don't have a very strict reporting duty. Of course, we report the progress, but to me, it was I mean, never regrettable in any case, and I mean, highly thankful that there was these people that invested their own money and believed in a team from basically the University of Bern, essentially, that worked together for a while, but then eventually tried to set out to industrialize this, right? And it's a very the core team in the beginning, very academic driven, right? Very little commercial sense. I mean, I'm a late co-founder, so basically I'm Mr. Commercial in the beginning, and the process that we took the company from where it was to where it is now was very painful. And I mean, without someone, I would say, a bit positively naive, and in the best way possible, it would have never come to life, right? And I mean, the whole team invested their own money, right, in sums where I would say the team was also showing a similar commitment, which probably helped the angels to kind of reinforce their belief a little bit.
So it was a good and lucky story, right? Because there are stories where this matching is not as good as he said, and sometimes it's very good, and sometimes maybe not in the.
I would actually let me add to this point. I want to say some. There is, of course, the admin effect that Raphael mentioned. Of course, we see that as well. Our cap table, just from the angel side, was a bit more than what you should have, right? One should have. So we had also actively to kind of work with in the later funding rounds, we had to actively also work to install clauses in the shareholders agreement. And I mean, there's always tools to handle minority investors, right? But at the same time, you also, I mean, you want to keep the company investable, right? And I mean, it's a lot of, I mean, if every angel would ask me one question every day, right, I would do nothing else than to answer questions. And I mean, luckily they don't do that, but in theory, it poses a lot of capacity on the management if you have that.
I think that's something that for founders certainly to be aware. There is a certain amount of management for managing those angels, because they also talk. Like if you disappoint one guy, that might cause a bigger effect that causes you trouble. So you want to do that job right, and it's additional job that you say yes to if you say yes to angels. But it's my experience by far not as intense as having venture capital investors, which I love, of course, as well. But it's very different.
How do you then deal with? I mean, there is a business angel usually also actively supports your startup during your journey, and there are certain stories where I heard of that angels can be a little bit, let's say, over motivated and wants to have a say even operationally. So if things gets too detailed and they really are trying to influence how you do your.
Yeah, that needed
How do you
to
deal
be.
with that?
We had cases where this needed to be managed a little bit. Like one, he's not here, so I can tell you very openly. One guy had, that was previous company anyway, had a logistics company and had sort of his own agenda. Like he mentioned as part of becoming an investor that, there's an option that his company could at some point do logistics for us. Mm-hmm. That was for the EU region. And then in the end, when we were ready for EU, we looked at providers, including them, and there was one roughly half the price. And I had to tell him, hey, we're not going to go with your firm, but with your half-price competitor. And that's, like, he hated that. And he wanted to push us in a situation like, I supported you early on. He expressed his disappointments. He answered less of my phone calls afterwards. But that was a reality. Like it should be in his interest to do what's best for the business. But it's easy said, and sometimes these real world situations are like you're friends with this guy, but he wants to be less friends because you just declined his offer. But that's more very specific example of someone with his own agenda. Other than that, it's more the opposite. People are offering help, and we had a price increase discussion just like 2 weeks ago when we had our general annual assembly, and asked that to our roughly 30 people that attended the meeting. And after the meeting, we had loose conversation, and people came with really good real-world experience of their own businesses, where they said, hey, we once did price increase, and we handled it like this. And so for me, it's a beautiful pool of knowledge that I can benefit from when needed, but I never had the feeling like someone is pushing that on us. So I'm not concerned in that regard.
But might be from the story you mentioned, it might be interesting to also uncover if there is even an agenda that investor brings on board. So because then you can also manage that a little bit and understand why is he even investing? Is it or is he willing to or she willing to bring in?
But you have to manage the expectations between the investor and the startups.
To be fair, that was a thin line there, because if I would have told him day one, we're not going to work with your logistics firm, he would not have invested. Mm-hmm. But I was not promising him that he will get that job. But it was a little bit of balancing, saying, hey, yeah, we can imagine a future where you are at. So it was a little bit of a balancing act. We're friends again. He made a bit of money with that exit case, so we're turned out all good.
Maybe to a question then to Jörg, from your perspective, were there ever startups where you actively advised to not bring on board an angel investors?
Not bring them, if they don't need money. Yes, it makes independent. I know that. And to be clear, you have to find the right business angel or the right people or the right venture capitalist for you. And you have to understand the expectations on both sides. Mm-hmm. You need money. If you don't need money, then don't look for money. Look for the customers and look for the product. But most of them also, they need the money. And sometimes you have not the chance to look to them, and then to decide, I take this here, I take this here. That's not so often. In reality, you have to look for money, and to look for money, you spend a lot of time, I'm sure, because it's very hard to find a group they invest in your company. And it takes at least 5 or 6 or 10 months for the next financial round. That's important. But I cannot say for this business angel is good, for this business angel is bad.
Mm-hmm. Okay. And if you now invest in a company, so there are several options that causes to influence. So you have equity, you have maybe a board seat, maybe other kind of influential possibilities or supportive possibilities. What do you actually really want, and what is negotiable when it comes to the?
What I want is as a business angel or a part of the business angel group, that we have at least 10 or 20% in a very early stage, not in a Series A or in a very early stage. If you only have 0.0% and you give 10,000 Swiss francs, the aufwand for the management is too high. So, and if you have a little bit a good stake, then you have also a little bit influence, and you are interested that the company will go up. And probably you have a seat in the board. It cannot be. But if you have some investors, then you make a group of investors, and one of the investors have the investor seat with the special requirements, if for the salary of the management or all these things, or for the strategy. I think that's good. That's also important, and then that can help the company. So I looked at that I have a good board. The composition of the board is for me important, and I think it's also important, even if the company is very young, to establish a board with 2 or 3 independent people. It's not easy to find, but it's important, and it helps the company. It helps the company to grow. And important is a clear difference between the investor and the operation, or the operation that the management has to do. The investor is never in the operation. If it would go in the operation, then he should be a co-founder or something like that, but not a mixture between them. That's not good.
In the beginning, Raphael and Max, you both mentioned it. We are hardware companies. We need financial support anyway. Can you maybe outline this a little bit and tell us about your experience about what type of startups do anyway need financial support compared maybe to startups that are more software driven with all these AI tools, where maybe we can think of, hey, can't we do it ourselves, bootstrap it, compared to capital intense startups like you had?
I'm a hardware guy, so I always was in the position that we needed quite a bit of money. Like in an early stage, already millions, quickly being 2-digit millions. I don't know the world of bootstrapping too well. A good buddy of mine, our former CFO, now has a SaaS startup, and I witnessed his case a little bit, and it's so different. I prefer ours because for me, like having investors on board makes it a lot more of a real company with the responsibilities that investors bring, with the need for growth or the expectation for growth that investors bring. For me, that's exactly what helps me making it so it feels like a real company for me. And it's, as this is the angel discussion, for me, it's actually the angels that made that possible always. We had always tried in very early stages for VC money, like traveled all of Sand Hill Road in Silicon Valley, and just invested a lot of time, or wasted a lot of time, you could say. In the end, it was the angel investors, Swiss angel investors or German angel investors, that ended up being the ones giving us the important first rounds of funding.
Mm-hmm. So if I summarize what you said, so it doesn't matter what kind of startup, what type of startup you would say, you would anyway go with business angels or investors because it gives you the certain type of structure and the support that you need and so
I mean, that's our recipe for our cases. Sure. I can't really speak to companies that function very differently, but I have a huge respect for business angels because they're the ones having made our companies possible in terms of financing in early rounds. That's also why I'm very passionate about protecting them with good terms that are angel friendly. So if then later on some big institutional investors come in, things like liquidation preference, the VCs that work with us know how painful I am. And we rejected millions of Swiss francs already because we didn't want to accept terms that bring the early angels in a worse position, or also employee shares, which would often be treated similarly. I don't want in a medium good exit case, the angels then to to not make their money back whilst the VC makes their money back, basically. Very simply speaking, I like fair distribution. If it's massive success, it should be fair, like pro rata distribution. Same in a medium good case or terrible case.
Yeah, you just tackled the next question. We'll put that to Max. So what can a business angel do that a VC can't?
I think, and Jörg mentioned this before, I mean, if you invest your own money and you make the decision about your own funds, I think that gives a lot of flexibility and a lot of freedom. Ultimately, as the entrepreneur, you convince someone who can say yes or no to you right away. Whereas, of course, the institutional funds, they basically have their own governance and their investment committee, and they invest money from people that they basically never met, right? I mean, thinking of pension funds and so on. And I think this kind of goes in both ways, right? Because you can attribute in the beginning the flexibility and the openness to be faster for you, less admin, and a lot of advantages. I think if you kind of look on the other side, of course, that comes with a certain disadvantage as well, because there is no structured investment not always a structured investment hypothesis. And basically, maybe he invests into your company because he likes you, or maybe it's because you solve a problem that he has right now, and later on he doesn't have that anymore. So you become obsolete in terms of like the need for investment. And I think in that sense also, I mean, as the entrepreneur, you have to, I mean, raising money comes from a business plan, right? It comes from inside out, in the sense that you think what you need, to basically fulfill your mission as a company, and that requires, I mean, if you have hardware businesses, you have a certain capital requirement, and having an investor who can allocate a certain amount of capital to your company, that's very reassuring also going forward, because it always takes longer and it's more expensive. And just to make this a bit more specific, right? I mean, our seed round was led by Swisscom Ventures, and in the early stage, we met with the partners basically for them to kind of review the management of the company. And they said to us, look, we have basically like a capital allocation up to 30 million. At the time, they invested, I think, 4 or 5. Which was only partially of it, right? And then they say, like, it's not guaranteed that you will get that money, but if the traction's right, if you do your job as an entrepreneur well, then there is the possibility to that, and there's very rarely angels that basically just completely invest all their fortune into one company because they believe that, like, this is the way to go, right? Usually it ends after the first ticket, or maybe the second.
Yes, I think it's very important points that you added. It's always very crucial for the founders to know who is your investors, what are their incentives to invest, if they can do a follow-on, if they can't, if they want to, and that's something which I would advise everybody to address in the first meetings already with investors, because then you know what to expect, and hopefully everybody plays with open cards. Otherwise, that's obviously something you'll learn as well, not in the more comfortable way. And now we go a bit to the point when it doesn't make sense to raise funds. There's an open question here to all of you guys. In the startup world, fundraising is extremely glorified. I mentioned it in the intro. But honestly, how many founders in the room? For how many is it actually the right way or the wrong path? And how do you sort of like get to a way to understand if your company should go the way to raise funds or to build up the venture without external capital?
So I think the chicken or egg question about kind of raising funds or don't raising funds is that I think what I see and what I also discovered with us from time to time is that you need to have like a customer who wants what you make, right? It's not you thinking, oh, I have this fantastic idea, I just make it, right? I don't know who I'm going to sell it to, or maybe I dream of something that who I'm selling this to, right? I raise some funds and I do this and then I'm busy here and just going to the customer, getting the validation basically by someone to say, even if it's basically a commitment to say, okay, I want this, right? Even if I don't pay you from the first unit, maybe I pay you when the first unit works, right? It's a conditional purchase order, for example. There's many ways of really getting that, right? And if you don't have that, there's a huge risk that if you're getting busy with all the other like startup ecosystem topics, then you just run into a direction that eventually you raise money for the wrong thing or you spend money on the wrong place. And I think this is like finding a balance for that question is extremely important in my opinion. And it doesn't end basically when once you raised your first round, right? It continues to be the case because afterwards it's, do we do that application? Do we do the second application? Do we go to the US or don't we go to it? It varies, right? And having an answer to that, I think, drives what you do then on the fundraising side.
Yeah, and what you need. So if I summarize, it's have a clear problem that you solve that actually solves a pain point where you have somebody that is willing to pay for the product you build, and then you can build up the business plan and understand how much capital is required. Anybody else wants to add something to this question? Then I would ask you, Jörg, a question. You see a lot of pitch decks, and you receive probably one funding request every day. So what are you wishing from founders to respect, in a sense, when they start their fundraising process?
Yeah, I think everybody of you knows the answer. Because you have to have a vision, a dream, but keep them grounded in reality. If I see a plan, I see always the same figure: 1 year, 2 year, 3 year. It's the turnover, 1 million, 2, and then on year 5 it's growing up. Not on year 6, not on year 4. Why? I don't know. I think one point is important, that people has to be coachability. So if you have a discussion and he has always right, my wife has always right, but not the startup. So you have to have a discussion. And if it's possible to have a discussion and you bring the company in a good way, then the team is also hearing and not only fixed on your idea. That's important for me. And then they have the skin in the game. They have to know what they are doing, the deep knowledge about the solution. And they have to find the customer who is willing to pay for that. And that's the first thing you have to think. You have not only, because it's technique, it's nice, but you have no customer. Look, all this VR glasses, there are a lot of Apple make and all of that, but I see nobody with these glasses. Probably in the future it will work, but not now. And I saw a lot of projects about this VR, this VR thing, but nothing was successful. It's not only the technical focus, it must be the benefit for the customer. And the next thing is the execution power. You have to see, you have to deal with them. Are they willing to really 6 months, 12 months, 2 years, 3 years in this condition to find the customer, to make the project really successful? So, and at the beginning, it's not so easy to understand they can that or they can that not. But you have to see the feeling. They are really, they have the power. And they have to be transparent from the beginning. Open books. You have to see what they are going. It's always wrong. I not so often saw a company where the business plan after 5 years was really exact. That's not a problem. That's real life. But you have to be open. You have to see, oh yeah, we are not on the right way, and come to us and then tell us really in an honest way, we have a problem, we have this. But on the beginning, you cannot see that. But it's important to have the feeling, the confidence. Is there a confidence between me and you as a startup? That's there are some points.
Can I add a small thing from a say founder perspective? I think the early customers. I think there's two things that I also take away from my own experience now over the past few years. It's like the first thing is it starts always super small, right? I never had the situation where I go out and then suddenly have like 100 customers, right? But it was the first one that made a difference. And the second thing is like the development for the business development is often that also like getting the first customer leads you to something else, right? And even the fight for the first customer gets you to something else, right? It's the active involvement in that. And I think to me that always was, to me that's always a measure of hope, right? Because you get shot down 150,000 times, right? Until one person maybe says, oh yeah, it's actually a good idea. And the process of accepting the no's, right, is always like that you don't necessarily need to say, okay, it needs to work with everybody. I'm speaking for our industry. If you're building a B2C product, probably that's a bad sign. But in that case, I think for me, always the promise was like, it doesn't need to be 10 people in the beginning until you have something that you can sell, right? It can be one person trying out one thing and finding one customer, and from that you go, right? And then that part, I think, is also the requirement for capital, which puts this in a different position.
Many startups are struggling with finding even business angels. And Raphael, you mentioned in the beginning that you are backed by, were backed by 30 plus angels. I rarely know 30 person anyway. So how do you find them actually? So what was your process during the road? And how do you make sure that it was a good fit?
So for this current company, the process was a little different. For the first company, it was more random. One angel I found because I had an extra ticket for a tennis game in Gstaad and gave it away to a random person in a coffee and said, hey, do you like tennis? You can watch the game. And this person was sitting next to me and turned out that he's doing angel investments and ended up being invested in the company. That's not a scalable approach.
Recommendation for founder's tip.
But no, I think that, but it's sort of scalable in a way of I found angels in the weirdest places just by telling our story, trying to be friendly and authentic. There's another guy at a trade show that was there, looked like a salesman. It was Julio Ortega with a very, very thick wallet and ended up investing 600,000 without asking any further questions. And I didn't know who the guy was. I was talking to him about touch panels and technology, and we liked each other, figured out we both have the same birthday and whatever. And then it was random. It was like 2 months later, like, oh, you do angel investments. I need money. Okay, let's do it. Here's the money.
Sounds a bit like superstition.
So that's the more random approach. But then what was lately for the new company, the best working thing for us was angel clubs like Are Ventures, where we went to pitch session, presented our case, a lot of angels in the audience, and probably also because we didn't fuck up completely, got a lot of requests from investors.
So to summarize a little bit, so there are several ways of finding your investor, right? The random approach, just what you can just use as a takeaway is basically just speak out. Just go out and talk to anyone. You don't know who's on the other side, even though a person does not recognize himself as a business angel. He might have a wallet, is willing to invest, for instance. So there's everywhere there are chances. So even in this room, you don't know if you talk to your to your neighbors, might figure out that the one or another is willing to invest in your startup. We are already at the end of our session, and we discussed a little bit the controversial situation of bringing angels on board or not. In the beginning, Guy asked a question: who is raising money right now? And there were mostly every hand was going up, and I was asking now a second follow-up question: is there anybody who changed now his mind or her mind about raising funds? All right. Thanks for this, for at least one vote. So it might be a good case for you, but not might be as well. So choose well. If you're still looking for funding, you can come always to Art Ventures or any other angel club or the angels here, many investors at the startup days. To finalize and to summarize a bit our discussion, I want to ask each of you to finish one sentence. You can either start off with take an angel if, or do not take an angel if. So
I get started.
All right.
Take an angel if you're ready to invest the time also as a founder to actually do all the work of fundraising, because it's a shit ton of work itself. And if you're willing to do things afterwards in a bit structured approach, so a bit more of a real company than just by yourself bootstrapping, it needs a bit more structure. There is expectations in terms of sending investor updates out, managing these people, and then it can be the best thing in the world. For us, it certainly is, and we think the business angels are one of the most crucial part of the startup ecosystem here in Switzerland.
Maybe I do the opposite. So do not take an angel if you haven't figured out what you want to build exactly, and think twice, basically, for what you spend the money that you have.
Take an angel if you find the right one, or buy a ticket and sit on a tennis court under
Yeah, maybe I'll add as well, don't take an angel if you don't want to build a scalable company and sell it in the end and make profit for yourself and the investors.
With this, we finish our session. Thanks for being part of us this year at the Startup Days. And if you have any questions, of course, feel free to come to us. We're still here a couple of minutes. Thanks.
Thank you.